And now to catch up on business, retail chain Tuskys supermarket has indefinitely closed down two of its 6 branches that it recently acquired from its rival Ukwala Limited after the National Competition Watchdog declined to approve the deal. In a letter sent by Tuskys Mattresses Limited, the company which owns Tuskys Supermarket, the Competition Authority of Kenya last Wednesday said that it had approved the transaction exclusive of the 5 outlets within Nairobi's Center Business District. Tuskys has initially taken charge of 6 Ukwala stores in the city and rebranded, but the CAK only approved the sale of 1 outlet, the one on Ukwala Jogoo Road. The move deals around a major setback to the transaction that Tuskys has hoped it would help to expand its presence across the city as rivalry in the retail sector intensifies. The competition watchdog has last month fined the 2 companies of 5.3 million Kenya shillings after engaging in restrictive trade practices in its deal. The CAK argued that Tuskys market shares would have increased by 57.15% for the current 39.3% in the deal that was approved. This percentage, the percentage above is above the dominance of the dominant threshold set by 50 plus 1% and set at 50 plus 1%, sorry, and what will make the major retail firm in the Nairobi CBD market if the transaction went through. And a significant growth has also in interest income to show that 76% growth in family banks after the tax profit in its first half period ending June 2014. The lender net earning stood at 875 million Kenya shillings compared to 496.6 million shillings that it reported in the similar period in 2013. Total interest income in the first half rose by 35.6% to 3.3 billion shillings, up from 2.4 billion, attributed to the increase in lending driven by the focus on the businesses within the counties. The bank chief executive Peter Munyere attributed their growth to the strategy of targeting its emerging opportunities within the devolved government units. The bank loans book grew 18% from 33 billion during the period of 27.9 billion Kenya shillings at December 2013. This has driven the increased lending to small and medium enterprises and personal consumers. Expenses on the consumers deposits more than double of 330 million to from 330 million to 684 million Kenya shillings. Family Bank has since been converting into a commercial institute in 6 years, registered the growth of significant that has seen full profits surpass the billion mark. In the same period last year, more than doubled its branch from the 35 to 73 that it has opened the 76th branch in the City Hall Annex, which will be relocating to Dagoretti outlet in the new site on Ngong Road. Munyere said that the bank will continue in expansion of its activities, especially within the counties, and tap the emerging business opportunities. And more on business, LinkedIn has agreed to pay up to $6 million in wages and damages after regulators found that it failed to account for all the hours worked by the employees. This included the $3.3 million in its unpaid wages of $2.5 million in damages to be paid to 359 former and current employees. It has also agreed to provide the compliance training and distribute its policy of overtime work in all applicable staff. The firm said that the talent has its number of priorities, and it is eager to rectify the situation. According to the U.S. Department of Labor, the affected employees worked in the firm's offices in California, Illinois, in Nebraska, and New York. Illinois, Nebraska, and New York. However, the regulator added that LinkedIn had cooperated with the investigation that has agreed to a proactive step to prevent the future violations. That's all on business. Remember, you're watching Arise Africa. When we come back, we give you the sports roundup. That is shortly after the break.